All right, welcome back to the black hole of real estate. And this week, I want to talk to you about something that's really, really interesting to me. It's the interest rate conversation. And so many people are talking about, wow, the interest rates they're high and they can't possibly buy. I've got a 2%, a 3% interest rate. I just can't give that up. It doesn't make any sense. And all of a sudden, you think, well, no one's going to buy. People are buying. And there's a commonality behind why they're doing it. And so that's what I want to talk to you about today. See, what they're doing is a couple things. I think last year people thought prices might come down. I know that we forecast they were not going down, and this time we were right about it. We all thought rates would come down a little bit, and they really haven't yet. And there's a lot of stories behind that, but they just haven't. So what happened if you made the bet that prices were coming down or rates were coming down and it would be more affordable? Gotcha. Prices actually went up and the rate stayed up, so now it's even less affordable than it was last year, and you could have had a home last year on that price instead of this year's price. So if you're tracking with me right now, it's more expensive. So how do you offset that? Do you throw your hands in the air again and punt, or do you take a look at the numbers of why it might make sense right now and what people are actually using as a basis to make these moves? Step number one, there's a growing number of mortgage products available out there that will count rental income in the qualifying. So let's think about the home that you bought years ago at 2% or 3% interest. It's probably got a super low payment. You probably have a good amount of equity because prices went up, and you can absolutely sell that home and use it for a down payment on the next home, or you could rent it out, whether yourself or with a property manager, and very likely make a sizable profit every month. After paying off your mortgage, have a sizable profit. So there's money there. So let's talk about that being bucket number one, the profit. Now, bucket number two is the tax write-off, because if it's a rental property right now, you can use some depreciation schedules to get some money back at tax time. And so that's bucket number two. Now, bucket number three, well, someone else is paying down your mortgage, and now that you're a few years into the mortgage, perhaps, more and more money is going towards the principal. That's making what you owe go down. So that's equity that's being built. So if you look at the profit, I don't know, maybe you're making $500 a month on the mortgage, above the mortgage. So it's $6,000. Let's say you get a few thousand of write-off and a few thousand of paid off principal. That could be a $12,000 offset. It's about $1,000 a month. Now the next house absolutely is going to cost a little bit more, and it's going to have a higher payment. But keep in mind, the reason you want to move was because the house that you're in is no longer as suitable for you as it was when you bought it. That's why people move. Space works great when you move in, or it's the best option available, and then it doesn't work, and then you move. So that's going to happen. So when we take these three buckets and we apply that towards new property, what likely happens is that the profit from the rental goes towards the mortgage, and in many cases the mortgage payment stays about the same, and you actually get into the home that you want. So if you're tracking with me, as opposed to selling your home and trading a 2 or 3% mortgage for a 7 or 8 or 6 or whatever it might be, you're just having both. You're growing two sets of equity, you're paying down two mortgages, although one person is paying it for you, and you've got some depreciation there as well. You may be able to deduct some mortgage interest if you also itemize. So another tax break, so two tax breaks, so two of each. And now if you're with me, the numbers are starting to line up just a little bit differently than the equation of the interest rate is twice as high. Well, the payment's not twice as high, but the rate, yeah, absolutely could be. Many mortgage projects do offer the ability to float down that rate sometime, over a 5-year period, to automatically refinance it. They'll waive the lender fees. I believe you'll have some closing fees, but I think they'll waive the lender fees, and those fees could be either paid in cash or rolled into that new loan. So that's about the only rolling in you can ever do in a mortgage is you can add the financing closing costs into the financing piece. So now that we've got 3 buckets times 2, we got 6 buckets of ways to make this work for you. A lot of people are saying, hey, you know what? Let's just suppose that we buy today, and on balance, the rates where they are right now, they're not very far off from the historical averages. We're Most of the times, if you look at those numbers, it's 6-7% in most markets. It was absolutely artificially deflated, suppressed, made the rates super low, and that worked until it didn't. But in this market, we do see a lot of people moving, and an ever increasing amount of people using a wealth building strategy to actually buy that next house and make it make sense, even if the rate's higher than the one that they have. So that's really, I don't want to call it a hack. It's just math, but if you want to call it a hack, that's fine. Your hack is don't sell your house, rent it out, go buy the one that you really want to live in right now, and be building wealth in 2 homes instead of 1, and that will play out over time really well for most people in most cases. So that's the trick, if you will. It's actually a rather simple strategy people have been using for many, many years, but it's helping make the higher interest rate conversation a little more palatable to many, many buyers. And while we're on that trail, is it a good time to pre-buy your retirement condo or you pre-buy your retirement home? And to me, the answer is yes. Most prognosticators, most economists, most financial people are all saying that home prices are going to go up. And they may say it's a big amount or a small amount, but many of those same prognosticators absolutely swore that the bottom was going to hit and prices were going to get rifled like 2008, and it never was going to happen. There was 2 different types of things going on in the market, and 2008 was definitely a financial crisis, and the last year or 2 was a different type of situation. It was just interest rates and a few other things. So pre-buying the retirement property, it really falls along the same track. You purchase the home as a second home, probably get a favorable rate. You can rent it out up to an extent that your mortgage laws maybe half the year, get some income to offset your taxes, insurance, and HOA fees, maybe enjoy it half the year as well, or a couple months out of the year. Whether it's Airbnb or long-term, many, many ways to earn some income from the rental of the property. The main thing is you're paying down a mortgage with that money, and you're building equity in the property through those mortgage payments. And again, when you're ready to move in there, it's good to go. Although if it turns into a really good rental, you may buy an additional condo to continue the wealth building when you sell your home from a different part of the country. And many people are using this strategy in Florida to pre-buy the retirement home, but also earn some money along the way. And it just seems to be making really good sense for people to make these moves right now, and I'm sure that they'll continue to do it. It's ever increasing. So if you had concerns about interest rates, I think I've given you some reason to think about what it might be that will help you through that process. And if you're worried about pre-buying a retirement condo, I think a lot of the analysis pertains to both pieces, even though they're quite different. The underlying principles are the math makes sense right now. And I think once you can look at the data, you can understand it and use it to your advantage, then you can make a really good decision. Does it make sense for me to purchase right now? Does it make sense to rent out my current home? Sure. I think in many cases it will. Does it make sense to pre-buy our retirement home, condo or otherwise? I think in all cases, the answer could absolutely be yes. But what if it wasn't? What if the answer was just a no? Well, armed with the information and the data and the math, if it doesn't make sense right now, you're going to have a really clear vision of when it will make sense and what conditions and criteria will have to be set forth for this to make sense. In all reality, some people find out when they go through the exercise that the vision of a retirement home in a different state actually may not make sense. There may be the pull of families and grandkids and friends and doctors and things that they do and quality of life, and they may decide that they're not ready to uproot and start over. That happens. There's a real good reality to that, and boy, wouldn't that avoid the mistake of buying a home thinking that's exactly where you want to live out your retirement, only find out that you were wrong and you lost some valuable time. I think once people go through the exercise and they really look at what it's going to be like, I think it gives them the power that they really want or were lacking. Am I right? Am I making the right decision? Is there something I'm missing? The what if game. So I think the exercise is solid, and when it's based on sound financial principles, then the only thing in the equation is the emotional side. Is it good? Will it be fun? We're going to make new friends. We miss the kids or the grandkids. Maybe we'll move them all down there. It's one of those things. But if you're trying to worry about the emotional side and you don't have a good grasp of the financial side, you're really just you're stuck in the mud. You can't move forward, backward, or sideways because there's way too many open loops of questions out there. So, my hope is today I was able to help you narrow down the economic side, the financial side of this, and then with that in hand, it allows you to make a clear decision really just on property and lifestyle. And I think that's what we all want. Hope you guys enjoyed today's episode. This is Ron Wysokarski for the Black Hole of Real Estate.